Hello traders out there in Traderland. My name's Dez here at Grok Trade. This is the weekend edition. This weekend edition is good through Sunday, December 2nd, 2012. Can you believe it's December already? Hey, a lot of apologies here. I didn't get my video out on Thursday. I'm traveling. I'm down here in the French Quarters here in Louisiana for a wedding, and anyway, I'm getting this weekend edition out late, so bear with me in the next couple of days. I promise I will get the videos out. At least that is my intention, and take care of you guys. Check this out on Friday. Mixed markets, S&P and Dow both in positive territory, but just by a smidgen. But we have NASDAQ and Russell's down, leading charge to the downside. Banks also off. So, and you have mixed on movement here on the commodities down here. Now, something you'll see, let me pull this up so you can take a gander at it. This is FinViz. If you look right here, you'll see for the week, utilities did the best and financials at the bottom. Utilities is a defensive sector, so it's doing fairly well. So that is more of a bearish move, especially when you have financials down here at the bottom. Now going back here to the charts, this is the S&P daily. I'm on my laptop here, so the lines aren't going to look the same as my trading desk, but so they're simplified a bit here. But we had this big drop, but we had this V-bottom formation. We go back north, and a nice little bounce to the upside. Let's do a quick Fibonacci retracement from perhaps this high down to this low. Yeah, so we're approaching the 61.8 range, and going into the week, we're finding that we do have a resistance at the falling 50-day simple moving average, and that could be a nice little pullback before this thing wants to drop again. So be watching this. We do have a doji ending out the week. Speaking of the week, let's take a look at the weekly chart. If you'll see, we're in an uptrend, higher swing high, higher swing low. It's a little wedgy there. You can see these two lines coming together. A little wedgy. Not too bad based off of those two lines. But we are bouncing higher here for the week. So we made a higher high, higher low. We are heading higher. But I'm not convinced of this. I don't see this heading back to this 150 mark on the spider. And by the way, we are looking at the spider here. I think that's going to be a tough area for it to get back to. And anyway, we'll see. But if you take a look here at the monthly, you'll see we're at a big fat rising wedge, which is bearish divergence. I'm looking at stochastic down here, but we did make this low. We did bounce back higher, and we do have this doji. So the question is, for the month, what's going to happen? It looks like we could be building a high base above 140. If we do that, we could break out. Let's go to the S&P itself. Take a look here. Chart. Remember this trend line that I had on the monthly chart, support? We did break that area, but we rallied right back, closing above it. It's not by accident. It's because these are very well drawn trend lines that this happens by. But the bottom line is we're still in this rising wedge. This is problematic. Here on the weekly, bouncing higher, and then on the daily, you'll see, man, what a falling wedge, boom, V-bottom, we pop up, breaking resistance, we come down, test this resistance, rally back up. But I think it needs time for a breather. We need to either base sideways, or I think that we have a better chance of dropping. Let's take a look at Apple. A lot of you guys are trading Apple. What I do not like about Apple right now is this could be a flag. So if I were to take a fib here and bring it down, you can see that we're just below the 61.8 Fibonacci. That said, you have this issue where you have something that looks something like this. It's kind of a little flag formation. So if you have this big drop like this and a flag, you could easily get another drop commencing. So that's something to certainly watch for. And let's see what the weekly looks like. The weekly had a nice bounce off of a major support area, and it's coming up. The question is, can it continue on this trajectory? But this is nothing more than a bear pullback right now, so that's problematic for Apple. And on the monthly, and we started to drop. We went down, 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 got near 500, buying opportunity, come right back up. So for the month, we're trying to fight back north, but I see some schisms taking place here in all the major markets. So if you look at Google, Google's looking really strong on a daily. I mean, Google's just on fire. I like this look better. Big pop, bigger pop. So that's really nice with volume. So Google, I like the chart better. Yeah. So Google is a much better looking chart technically. Let's look at Facebook. This is a monthly on Facebook. Big red. We're already at $28, gang. And I'm still kicking myself that I didn't stay with my trade at 19, because that is a huge percentage gain. Taking a look here, nice run, but this is going to need to relax. Expect it to pull back a little bit, but it is increasing on increasing volume. Isn't that is powerful? And we closed at the day's high on Friday. So now let me jump on a soapbox here for a second. A lot of you guys have been listening to my videos for a long time. I sincerely appreciate that. One thing you haven't done yet is make the decision to quit losing money in the markets, because in fact you probably are losing money in the markets. If you're doing that, what you need to do is quit doing what you're doing now and change. Have the courage to do something different. So what you want to do is make the decision to go through more formalized trading education. I don't care if you choose us or somebody else, but it is your fiscal, if not moral, responsibility to get formalized trading education. It's likened to trying to fly a plane. You have a very big responsibility to go out there and fly a plane and to have the right education to do so. What you don't want to do is put your family in that plane, take yourself in that plane, and then go flying without the proper education. That's irresponsible. It's dangerous and reckless. Well, the same thing with your capital. You still have a family you're taking care of. What you want to do is safeguard that capital by getting the right trading education. We've been doing this a long time. I've mentored over 700 people myself and been part of some large educational firms such as Rich Dad Poor Dad with Robert Kiyosaki, Teach Me to Trade, Option Success, Star Trader, a bunch of them. And I'm here to tell you, you get the very best of trading education right here. Of course, I'm biased, but if you want to be a part of this, you have one last chance for 2012. That's December 8th, 9th, and 10th. It's over the weekend. You can do it from the comforts of your own home. All you have to do is fill out the form and let us know that you'd like more information on it. And here's the thing. Do it now, because next month and all of 2013, prices will go higher, but it's really not about the prices. It's about you changing and making a better tomorrow. What you want to do is make that change, take that step, have that courage to say, maybe it is time that I do that. I've been thinking about it too long. Let's make that step today. So anyway, I hope that's helpful. Take care, safe trading, and I wish all of you the very best. Let's make some money this next week.